If you have trouble finding where the project is located, it's on page 2 of your assignment page in Cengage, and you can click to page 2 in the right upper corner here. Scroll down and you see all 3 parts, part 1, 2, and 3. I click on part 1, and once you're in it, you get to this screen. Okay, this part 1 have 2 exercises or 2 components here. The usual menu on the left side. So the first thing that you have to do here is the journal entry for these transactions in the month of May. As an example here, May 1st, pay rent for May, $5,000. What are the 2 accounts for this transaction? And what are the credit and debits? We know it's going to be $5,000. What are the 2 accounts? And it's really easy here because it's a drop-down menu. So paid rent, that's going to be cash. And I mean, it's pretty easy here because it's obvious it's going to be rent expense, $5,000, debit, and $5,000 credit to cash. Debit is to rent expense. Check my work. Yes, that's correct. Purchase merchandise on account. Let me jump to number 4 here, or May 4th. Paid freight on purchase of May 3rd. But be aware of the check my work. Check my work may be limited. Let's go back here to Blackboard and go to project in the menu here for information about the project. So you have part 1, which is unlimited check my work. Okay, unlimited check my work in part 1. Unlimited time, unlimited submissions into the due date, and you can also print it out. However, when you get to the week where you do part 2, there's only 2 chances to check my work. So you could only click on that button 2 times. So use it wisely. I would go do it all and then click on the check my work. Don't click on check my work as you move along. Do it at the end. That way you can see what you did right or wrong. But you also have unlimited time and unlimited submissions into the due date. So if you're not satisfied with your score, you can redo it and resubmit it for a better score. That's part 2. Part 3, again, you also have 2 opportunities to check my work. So you use that button only 2 times in total. Unlimited time, but only 2 submissions into the due date. This is all 3 parts combined to be 20% of your final grade. Set out time, approach it as if it's your exam. Let's go back. This is part 1, there's unlimited, so I used 1 already, but it doesn't matter. May 3rd, purchase merchandise on account from Martin Company. Terms, 2% discount within 10 days, otherwise full amount within 30 days. What is the transaction journal entry for this? What are the 2 accounts? Purchase merchandise. So it's going to be debit to merchandise inventory, the increase of this asset. For how much? It's going to be $36,000, but discounted by 2%. So it's going to be 98% of this $36,000. That comes out to $35,280. And then the credit is purchase on account, so it's accounts payable for $35,280. Okay. Unlimited check my work in part 1, so I could just use it each time. And we'll learn that if you didn't get this, no worries. In this project, use this attached spreadsheet right here. Here's the link. Click on it to download this spreadsheet. It's an Excel spreadsheet, and it looks like this. Where is it? Right here. Do you all see the spreadsheet? There are 2 worksheets in here, or tabs, income statement accounts and balance sheet account. This is the ledger, and we all know what the ledger is by now, right? The ledger contains pages, if you will, of accounts, and you go to each account, it contains the transactions for that account. That's journal entries. In the journal, it gets posted to here. And if you need information, this is your main source of information, the accounting information. So you go to sales and it gives you all the dates of each of the transactions related to sales, the debit and credit, and what is the current balance. So these two columns here, that's the current balance or the running balance each time. So the last number will be the ending balance. In the credit and debits here, that's going to be the balance of each individual transaction. It's pre-populated for you May 1st. The beginning balance is for sales 5,000, or actually it's 5,069,000. Cost of merchandise sold 2.8 million as the beginning balance of the month of the accounting period. What you will need to do is not submit this spreadsheet, but you use it. You use it to do your work. How do you use that? Well, let's go back to the journal, and we see the journal entry here. Rent expense, debit of 5,000. You're gonna post it to the ledger. Rent expense, let's find rent expense right here. It has a beginning balance of 83,700. I have to click enable edit, put in the date, and then it's supposed to be a description here, but you don't have to put the description. Cengage doesn't require you to. Rent expense, debit 5,000. Okay. Now what is this balance of rent expense after this transaction? It's going to be, you have a debit beginning balance 83,700 plus another debit, so it's going to increase the balance, and it becomes 88,700. That's the current running balance of rent expense after posting this rent transaction, rent payment. And then cash, post that to the cash account in the ledger, which is a credit of 5,000, a decrease. So you have a beginning balance of 83,600 debit. Now it's decreased by 5,000 because it's a credit. So take 83,600 minus 5,000, and this is the current balance of cash. Merchandise inventory, let's find merchandise inventory. That's going to be under balance sheet accounts right here. That's May 3rd, a debit of 35,280. The balance will become 652,400 plus 35,280, right? Because it's debit and another debit. The net of that will be adding the two together. The sum becomes 687,680. Then accounts payable, let's go down, or maybe up. No, I think it's down. May 3rd, accounts payable to Martin Company. There's only one accounts payable here. That's going to be for all vendors. So we'll use this one. It has beginning credit balance of 96,600. Remember, that's the normal balance because that's the ending balance of the previous period. The previous period's ending balance becomes the beginning balance of this period. It's 96,600 credit, and we have another credit of 35,280. So the balance becomes a credit of 131,880. Merchandise inventory here, we're going to post this $600 debit, so the balance is increased to 688,280. Then cash, May 4th, a credit of 600, so the balance becomes this 78,600. It's a debit, and now you have a credit, so you net the two together. You do that by minusing the 600. Okay. So then the current ending balance is 78,000. And you will continue to do that for all these transactions. First, you do the journal entry, post it to the ledger so that you know the ending balance. So the last number that you have in this section, the last number will be your ending balance. You will need that balance to do the next component of part 1. And again, you do not need to submit this spreadsheet, but you do need to use it. It's recommended, advisable. So I'm going to click on this tab here, the next component, and on here you have to complete an unadjusted trial balance. It's a report of the accounts on the left side here, and by convention you have assets first, then liabilities, then owner's equity. And what is the ending balance of cash? It's going to be a balance that's on the debit side. That's the normal balance of cash. Where do you get that from? From your ledger right here. Okay, it's not going to be the 78,000 because you're going to have more transactions, and whatever that number ends up being, you're going to take that number and populate it here. Let's say if it was 200,000, then from your ledger in the Excel spreadsheet, as an example only, then that's what you populate it with. Next, accounts receivable, merchandise inventory, and remember, these have to be on the debit side. Okay, these assets on the debit side. Accounts payable, the normal balance will be on the credit. Payables on the credit. Capital, credit or debit. Capital account, you will have a normal balance on the credit or debit side. Credit, yes, very good. Drawing, that's the opposite, so it's going to be here. Drawing is the same impact as expenses, so all these expenses will be over here on the debit side. Sales will be on the credit side. Okay. And then you have your total debits, total credits. It's your balance, and that's your project part 1. Then the week after, you do project part 2. Let's take a look at part 2. You will use, yes, same. We will use what we do with part 1 to do part 2, and then we will use part 2 to do part 3. Use part 1 and 2 to do part 3. If you did part 1 incorrectly, then you will not have the right answer to do part 2. However, after the due date, you will see the solution. You go back and you will see the solution, and you can use the solution of part 1 to do part 2. Same thing for part 2 and part 3. You can go back after the due date of part 2, see the correct solution to use that to do part 3. So here's part 2, and again we see the 2 tabs, 2 components. First, we have to, what is this? We have adjusting entries to do, and these are based on the transactions that are given. Journalized adjusting entries, May 31st. Okay, so not a whole lot of entries here. 1, 2, 3, 4, 5, 6. So 1, 2, 3, 4, 5, 6. So these are A, B, C, D, E, and F. Those are the 6 journal entries. The first one is A here. Let's do that. Merchandise inventory on May 31st. Okay. That is the ending balance of merchandise inventory, or the current balance rate at that moment on May 31st. So what do you have to do here? At the end of May, the following adjustment sample analyzes. So it's telling us this information, okay? Okay, so what you have to do is go back in part 1 and see in part 1, see what the balance of merchandise inventory is. Okay, and you compare to this balance. Okay, so if the balance was 400,000 before, and now it's 585, 200, what happened to the balance? It increased. But let's say if it was 600,000, it increased because we purchased it. But what happened if it was decreased? This was in part 1. Now, part 2, we see a decrease. What had happened? But I don't know what the situation is going to be. It's probably inventory shrinkage, like Andrew says. So if it is inventory shrinkage, but we're not learning that yet until today. Let me just check to see if that works. Yeah, it is. Okay. So it is inventory shrinkage. Excellent, Andrew. Okay, so the inventory decreased because in part 1, the balance will be higher. And now we see at the end of the period, it is lower, meaning that inventory decreased. So we have a loss of inventory. And when we have a loss, it's an expense. And that expense, we will use cost of merchandise inventory, whatever that balance will be, okay? And we haven't learned inventory shrinkage yet. And that's what we will this morning. So that's not a very good example. Insurance expired during the year in B, okay? It expired. What does expire mean? It means that we had consumed it. And when we consume something, that should click to you that it's an expense. So it's going to be insurance expense and an asset account decreased, okay? One of these accounts decreased. By how much? 12,000. Andrew says it's cash. Is it cash? No, it's not cash, Andrew. Okay, and you see the warning here, one more check my work to use is remaining. It's not cash because remember that this is prepaid. So first you paid for insurance. It's a debit to prepaid insurance expense, credit to cash. And don't forget that this is an asset account, not an expense account, because it's prepaid. And then later, you have to do the adjusting entry because this is prepaid. You haven't used your insurance yet. This is before the policy begins. But once it begins into the term and 1 month later, at the end of the month, you need to adjust this prepaid insurance expense account. You need to adjust that. But actually, Cengage doesn't call. I think Cengage uses prepaid insurance here. Yeah. So that's. That's what we go with. Prepaid insurance, which is an asset, and we need to adjust it 1 month later. That's going to be a credit to prepaid insurance, a debit to insurance expense. Yes. I know you know, Andrew. Okay, so this is the use of insurance or consumption of insurance. And we know that because it's expiration of insurance. And it tells you exactly 12,000. Okay. Now, here it tells you how much was used, but remember that other times they might tell you, okay, insurance prepaid, for example, just an example, hypothetical amount, prepaid insurance was purchased for 10,000. Okay. Now, prepaid insurance balance at the end of the period is 9,000. So if they tell you that, here's the beginning balance, is the ending balance, and we don't know how much expired. We don't know how much was used. So we have to do a calculation. We take 10,000 minus 9,000 equals 1,000. And this is the insurance that expired. Okay. So other times we get this scenario, this type of problem, but other times it'll tell you exactly. So you don't have to do that calculation. It tells you the amount of insurance expense is 12,000. Okay. Insurance is similar to supplies. So get supplies correct. Here it tells you supplies on hand. It doesn't tell you how much is used. It tells you on hand. That means the ending balance. So find out what is the beginning balance in part 1. That's the beginning balance, or the balance that was before, but now it's 4,000. So you take what was before and what is now, you subtract one from the other to get how much was used, and it becomes supplies expense. Okay, that's C. Then depreciation. It tells you how much is depreciation for the year. So you don't have to do any calculation. You just have to book this depreciation expense. And what is the journal entry for that? If you don't remember, go back to the chapter. It's the chapter on inventories. Then salaries accrual. Remember, in this chapter of adjusted entries, we have 5 types of journal entries. We had accrue expense, what was incurred but not yet recorded, so record it now. And that's what this is. Salaries, it was incurred, not yet recorded, for the number of days unpaid, for the salaries that was unpaid. And you have accrue revenue, and then you have prepaid, which we went over insurance and supplies. That's prepaid. And we have unearned revenue. Here's another adjustment, which is customer refunds and allowances. We learned that last week in chapter 6, the beginning of chapter 6, or first half of chapter 6. So book this journal entry as an adjusting journal entry for customer refunds and allowances. Okay, so all of these journal entries, again, use this ledger, this spreadsheet. Continue. What happened if you had it wrong? Well, go back and correct it. If you did part 1 wrong, you mess up the balances, but then you have the solution, so go back and make the correction. So that way you could continue on with the ledger and post these transactions into the ledger so that you would have the correct ending balance to use in part 2. Because in part 2, again, you have to do a trial balance, but now it's just called the adjusted trial balance. Why? Because you just had adjusting journal entries. You just had these transactions. It's going to change some of these accounts and balances. It's going to impact it, and you're going to use the updated information to complete the adjusted trial balance. Okay, and that's project part 2. Is everyone clear so far? Do you understand what you need to do for part 1 and part 2? Okay, there are 6 of you here, so 7. So I need to make sure you're all clear before I move on. Elizabeth? Alicia? You good? Okay. Then let's move on to part 3. Now keep in mind that the solution will not give you the ledger. This is your ledger, your file. It's only going to give you the solution to the journal entries and the trial balance. So once they give you those solutions, you can update your spreadsheet here if you had done it incorrectly. So project part 3. And there are 3 tabs here. The first one that we are on, this is the financial statement, and there are 3 of them: income statement, statement of owner's equity, and the balance sheet. And it's all dropped down, so it's very efficient for you. You just need to know what to do. And you select the appropriate account here. You know, income statement, first thing is going to be sales. Next, cost of merchandise sold, gross profit. And what's important is the balance. Where do you get the balance from? From your ledger. Okay, Megan, yeah. From your ledger here, okay? But you can get it from the trial balance of part 2. So you can go back to part 2, the solution of the trial balance. You go back to part 2, and here's the trial balance. You are going to get the solution if you had done it incorrectly. And you use these balances to do your financial statement. Or you can use the balance from your ledger. Financial statement in part 3. Back on part 3. Okay. These 3 financial statements: income statement, statement of owner's equity, and the balance sheet. That's the first item in part 3. Then next, you have closing entries. Right away, it should click to you. Closing entries, close out revenue expenses. That's the first journal entry. Next, close out drawing. Where do you close it to? Close it to the capital account. So you're gonna list out all the expense. Well, first list all the revenue account, which is sales, and then all the expense accounts, and you close it to capital. That's the first journal entry. The second one, drawing, close out to capital. But what are the balances? Where do you get it from? You get it from your ledger, or you can get it from, where else can you get it from in this instance? If you don't get it from the ledger, where can you get these balances? Someone tell me. From the trial balance in part 2, and that was the adjusted trial balance. So go back to part 2. After the due date, there's the solution. Get the balances from there. And then you do a post-closing trial balance. And you see that there are no expense accounts, no revenue accounts. Why is that? Anyone know? Why are no expense accounts, no revenue accounts, no drawn accounts? Why is that? This is the post-closing trial balance, and we don't have those accounts on here. Someone tell me. Andrew says closing entries previously cleared those accounts. Outstanding. Yes. So this post-closing trial balance will really be no different from the previous trial balance. The only difference is that there's no revenue expenses because it was closed out to drawing. There's no expense accounts because it was closed. No, I meant to say that it's closed out to capital. There's no revenue, no sales account because it's closed out to capital. No expense accounts because it's closed out to capital. There's no drawn account because it's closed out to capital, and we did that over here in the previous step. So if we close it out to capital, then the capital balance will be changed from the previous trial balance. And everything else will be the same. All these will be the same because these closing entries do not impact any of these balances. And that's your project part 3, okay? I went over it pretty thoroughly so that way you have really clear understanding of what needs to be done. Yeah, so do your assignments for chapter 6, do it early so that way you have ample time to do the project.